Bitcoin just lost over 30% of its value in 6 weeks, wiping out $1 trillion from the crypto market. Is this a temporary dip, or are we entering a full-blown crypto winter? The crypto market is in massive pain. The question everyone is asking is whether this is just a quick dip or if we are officially entering a new crypto winter. In the last 6 weeks alone, over $1 trillion has been wiped off the total value of all cryptocurrencies. Bitcoin, the largest digital asset, has fallen sharply, crashing below $81,000 recently. This is the lowest level it has traded since April. Bitcoin has now dropped approximately 30% from its record high, which was above $126,000 back in early October. This slide has completely erased all of the gains the asset had made since the start of 2025. This widespread selling has triggered extreme fear across the market, pushing the fear and greed index down to 11. This drop in sentiment has been fueled by record liquidations, where over $2 billion worth of leveraged trading positions were wiped out in just 24 hours. These mass liquidations tend to amplify downward pressure as forced selling accelerates the move. The market weakness can be traced to two main factors: institutional money pulling back and uncertainty about the broader economy. First, institutional investment demand has disappeared. United States spot exchange traded funds, or ETFs, have seen persistent outflows, with total withdrawals nearing $3 billion in recent weeks. Analysts say this absence of institutional buying is leaving the market without a key source of demand that supported earlier rallies. For example, ETFs from firms like BlackRock have seen outflows totaling around $1.3 billion this month. Second, overall risk appetite is collapsing due to macro uncertainty. Investors are worried about a potential bubble in artificial intelligence and tech stocks, which tend to move closely with Bitcoin. Adding to the anxiety, the Federal Reserve's next interest rate decision is clouded with uncertainty. Expectations for an interest rate cut in December have been fading, and high interest rates historically weigh heavily on speculative assets like crypto. The current price action is putting significant stress on large corporate Bitcoin holders. The firm's strategy, which holds a massive amount of Bitcoin, is particularly sensitive to the continuing decline. Analysts suggest that a critical battleground for determining the next phase of the market sits between approximately $84,000, which is the average price paid by investors in BlackRock's largest Bitcoin ETF, and approximately $73,000, which approximates the overall cost basis for strategy. If Bitcoin fails to hold around the $88,000 to $90,000 level, some analysts warn the price could head toward a key liquidity zone between $78,000 and $82,000. Others suggest that if the current support breaks, the next major downside target is near $74,000. However, not everyone sees this as the end of the line. Some crypto experts note that every prior decline of this size has historically been followed by new record highs. Others argue that experienced long-term holders are remaining cautious, while smaller investors are starting to quietly absorb the coins being sold by large holders. For the market to stabilize and signal a potential recovery, Bitcoin needs to reclaim major price levels, especially breaking back above the key psychological area of $100,000. Until that happens, the market remains fragile, signaling that traders prefer protection over exposure. If you want to stay updated on how these events unfold in the coming weeks, make sure you hit the like button on this video, subscribe to the channel, and turn on the bell notification so you don't miss our next update. Thank you for watching.